Joining me via phone call from the New Jersey Turnpike is Giovanni Mancini.
Yeah,
How's it going, G?
yeah, thank you. Everything's smooth, no complaints, no traffic.
That's good. That's always a good thing. So
Yep.
this episode, we're going to focus more so on kind of the dynamics of what's happening in our world as risk managers and brokers, and the big trend nowadays in the insurance world is this concept of Insurtech. And so Insurtech, for anyone who's not familiar with it, Insurtech is essentially taking the current technologies, whether it's cloud-based computing or kind of big data or some other elements of the big software packages that are now available, or even down to the increase in app technology that's available throughout the world now, and applying it to insurance. And I think the big factor here is that insurance has kind of been looked at, and it's also has been a clunky kind of old, one of the oldest industries that's around, and it's operated that way for a long time. But Insurtech is beginning to revolutionize the way that brokers, risk managers, but also insurance companies and all the other professionals in the industry are kind of executing how they do business, and also just completely changing their business models in general. So would you say that you kind of concur with that assessment, G?
Definitely, and it's in all various parts of the insurance, I guess, process is where you see it as well. Not just from where we're going out and marketing and how that dynamic has changed over the years with some of the products that are available, but then just some of the artificial intelligence that's now incorporated inside of the insurance process, like it could be an AI claims adjuster or something like that. We see a lot more of that human element removed from some of the, I guess, flow through or easy claims handling process. So I think recently I was just on and I did the entire claims process with an automated service, as opposed to, when I first got into the industry, that being entirely human-to-human contact. So just some parts of that. And to be honest, the process was not even an issue. I can imagine at some parts of it where they're elevated to a more complicated claim, then the necessity for a human comes back into the fold. But for the most part, I didn't really find it to be any bit of a difficulty. But that's just one of the many facets of insurance itself and where it's starting to incorporate itself.
Yeah, and that's a good point. So you touched on, kind of the human element, and I know that both you and I, we were, trial by fire almost, or the way that we were brought up in the industry.
Right.
A lot of our mentors came from a very old school, grassroots, kind of knock on doors and network and build relationships kind of perspective. And I don't think that's necessarily gone away, right? But it's changing. So
Great.
in terms of, like you said, just kind of the service aspect of things, being able to use a technology to streamline, a certain part of the process, isn't necessarily completely eliminating humans from the process, but it's really kind of empowering us to do what we're best suited for. And what we're best suited for is be able to deploy our knowledge and our experience in the insurance and risk management world. So before we even get too far down the road on that one, what was your experience, G, in terms of the old school way of how you were brought up doing insurance, whether it be, finding new clients or, servicing the clients that you had on the books?
Yeah, so I've always kind of believed in, that 10-mile radius from the last great story. I always talk about it. The last time you had either a successful relationship that was built out of, almost scratch, or the last time you were able to tell a good story, I always looked around like a 10-mile radius where I could then take that story and tell to somebody in that neighboring area. They kind of feel a bit of connection to it because of the proximity. So that was kind of how I always had started. And whether it be a niche market like the education space or municipal space, or even just the private sector, whether it be manufacturing or something like that, being able to take a good story somewhere else was what I found important. And that's kind of what I got brought up on doing, taking that and then trying to extrapolate it out over a wider segment. The outside of that, I found that the efficiency part always I was enamored with it, where I felt like I had a few qualities or strengths that I wanted to continuously be able to use. And I bring it back like the theory of comparative advantage. If there's something that you do better than everything else, you should outsource every other of those skills until all of your time is just doing what you do best. And I find value in Insurtech there because I remember when I first got started, how arduous going through all the applications were constantly for a new risk and having to resave it over year by year. Having a product that has all of the information pre-populated for me to be able to go out and get a quote in real time is incredibly valuable to me because I feel like, and when I'm most efficient, I'm out there attempting to close new sales or create new relationships. And that part of Insurtech I've completely embraced for sure.
Yeah, it's that's I had a similar experience coming up. My mentor that I worked with, more than anyone else, his mode of just kind of building his own personal brand and making connections was very much that, 1 and 1, 1 plus 1 equals 3, being very close proximity, right? So, just the idea of kind of just to draw attention to something that's more of like a tech type example of this is just think if, you just had LinkedIn, but you could only connect or correspond and interact with people that were your first or second order connections. That's what the old world was, right? The new world is, and the best phrase I heard was, you can knock on 100 doors in one day if you just kind of commit yourself to it and put your boots on the ground. But nowadays with social media, Insurtech, you can knock on 50,000 or 100,000 doors in a day, and that just completely changes the game. It changes the volume, but it also changes how you have to kind of disseminate that information, disseminate that message, and then execute on actually doing the work. And so what we're doing right now in terms of podcasting, live casting, putting out, content on social media or blogging, all of that, is still relatively new, but it's completely changing how we're able to disseminate information and also establish ourselves as subject matter experts, as opposed to the old school, sit at the corporate conference table and within a 60-minute meeting or a 30-minute meeting try to impart all of that expertise and impress the people on the other side enough to the point where they're willing to sign on and take your advice as a professional. So I think that's a completely different dynamic. In terms of what part of the old school would you say you're still retaining in the way that you're going about, executing and doing your business?
So I will always firmly believe in the concept that insurance is generally very difficult to comprehend for somebody that doesn't really deal with it every day. So I believe in that personal relationship where you should have some regular interaction with the person that you have that client relationship with pretty regularly. I think that being able to pull it off and continue to have some bit of frequency to that is important because it builds a familiarity and a trust that I'm not sure I could get elsewhere. But I will say, transversely, some of the brands or people that I find myself valuing or trusting the opinion of tend to be online brands, and it's such a critical thing to consider and, I guess, embrace is you're able to build a brand where you can get your opinion or you can get your expertise out to a large audience where they can begin to trust you without ever having that one-on-one meeting. I always will firmly believe that being in front of somebody gives me my best chance to ultimately work for them. But I completely agree and embrace the idea that you can also build a social media presence where you can have people begin to trust your subject matter expertise before you even meet them. Where you don't have to necessarily knock on that door. They might pick up the phone and give you a call. So being able to do that, we have that somewhat regularly. We get calls from, the old-fashioned referral from, one of your current clients, but some of them are just, hey, I watched the podcast. I have this issue going on in my life currently. Can we talk about it?
Right.
For me, I think that's huge.
Yeah, and I think the rule of thumb here is it used to be that, you had to go from zero to sale with a client, either face-to-face or, the old adage from
Right.
a sales perspective that you had to, reach out to them, 10 times for most sales in order to close the business. Nowadays, a lot of people make 70% of the buying decision before they even talk to you in person, which is it's incredible from the standpoint of, one, that's a lot of faith on their part, right? That they're taking what you're putting out there to heart, and then from the other standpoint, it gives you a huge competitive advantage, right? If you're embracing these new distribution channels, right? I think you and I also agree that we're big believers in giving away stuff for free, right? So at the end of the day, we're going to put out as much helpful information as we can out there and make it easily accessible before you're even a client, or even if you never become a client of ours, because even if it doesn't result in a sale or us doing business, one, we've done good by trying to put some good information out there in the ecosphere. And the second aspect of it is that's building brand, right? That's building recognition and the understanding that we're here as, professionals that aren't just, we're not just focused on the sale. We're focused on actually doing the job, which is a good point. So now you don't have to give me the company line on this one. I push you a lot on different types of technology sometimes that we bring into the company. And to your credit, you have a lot of faith when I bring some of these ideas to the table. But also in that, right, not every single solution is a good solution, right?
Yeah, I completely agree with that. I always will be the first to chirp that I don't pretend to know things that I don't. And while I embrace the idea or the change of Insurtech and where it is, I'm not the first to that table to talk about why it's great or what parts of it that I use regularly. I kind of follow that old Jack Welch adage that when the pace of change on the outside is going faster than the pace of change in-house, you're likely going to find your end at some point. So I recognize that, and I'm always conscious of it. The parts that I find most valuable to me are always going to be efficiency driven at the forefront. So I think that most of our clients, whether they consciously talk about it or they subconsciously act upon it, are always fishing for efficiency methods or ways to increase their efficiency. So that's why we see a lot of these sales or a lot of our client relationships being able to be had over the phone, or most of it to be done before there's even an in-person meeting, because people recognize that if you fill up your day constantly with meetings that aren't necessarily going to bear fruit in the future, that might not be the best way to spend your time, especially when you're one of the revenue drivers in the company. So that part for me is I'm consciously aware of it all the time. And then, some of the things I use more often than not, I'm always guilty of, not doing I would say the most I can when it comes to completely tech-proofing my life as far as getting every single thing into every one of the vendor partners that we use. A lot of times I'll fall back on, just the normal way of how I got to this place. I always say that the repetition is where the value is, and you have to remember sometimes to just go back to what got you to where you are now. But you have to also be able to sprinkle in a little bit of the new stuff. It's no different than, I was a baseball player in college, then a pitcher, as they get older, they start to lose a little bit on their fastball. You have to be able to incorporate something else into your repertoire in order to constantly be evolving, because the world's going to revolve around you at the same or faster pace. So most conscious of that. But I do like some of the stuff that we've brought in recently, particularly the automation of the applications is my favorite one. And, when we started to bring that one on, it's the one that I probably am most excited about, not having to constantly, get that Accord application out to the client or fill out everything, from last year's file. It's already pre-populated. We can pick and choose kind of what we want to send out to the client for updates. I find it to be incredibly valuable.
Yeah, and so just to keep people in, so that service provider is called BrokerBudda. There's a couple of them out there that do that, and we kick the tires on them, and that was the one that we decided to go with because we felt like it fit our model. I think the other dynamic is that there are so many of these tools out there that, right now we're looking at potentially changing over our phone system and how we operate. Our strategic goal in the future is not really to invest in brick and mortar, but to be able to bring on really good professionals, whether it's on the service side or on the sales side, and not be bound by having to, find them office space or confine them to a cubicle. We really want to empower them to work however they need to in order to be productive. And in this day and age, that means being mobile, right? And so just again, to point to the current platform, you're coming back from a client meeting and, we're able to put a piece of content together without necessarily having to be in the same location and having to drive that, hour there and back that's required of that. And I like your point that, the real value and a lot of the Insurtech that we embrace internally isn't necessarily to remove ourselves from the process, but to free us up to actually do the high ROI stuff, right? So completing a certificate of insurance, filling out applications and things like that, that's all data entry. And from my perspective, that's all wasted energy and resources if you can find a cheaper, more efficient, effective way to do it. And so that's really what we've been focusing on. Now, in terms of the global scale, obviously we're coming from the broker side. We're also living in a ecosystem that includes insurtechs like the Lemonades of the world or the Hippo Insurances of the world that are really seeking to go direct to client. So in terms of those insurtechs, like, what's your impression of those? I mean, do you feel like those are going to infringe on what we're doing?
I tell a great story about that. There is I think it was probably about a couple of weeks ago, one of my closest friends growing up, he's a client of ours on the personal line side. I tell them all the time whenever they're asking for a quote, hey, just get a Geico or an Allstate or a Lemonade or something. Go out and get a quote just so that, you don't never feel like, I'm at any point pulling the sheep's wool over your eyes. Like, I want you to know that I went out and I did the job and I know where to go to find that. So, the house, fairly nice house. It's got an in-ground pool and all that. He comes back to me and he goes, hey, I got a problem like the mortgage right now. I'm having an issue where, I need to get the insurance number down a little bit to fit under what our monthly allowance would be essentially for our mortgage rate. And I said, go ahead, get it out. He came back. This guy was like $1,300. I don't understand. I went to Lemonade. That was the same thing. And I said to him, we could probably pull this off for about $850 through one of our carriers. And he was, a little bit flabbergasted, like, I don't understand. It's the same thing. I said, well, you have to understand, where you're going, what carriers like to write certain types of business, and then how to go about getting it. With that instance there, the two of them, one of them, the wife had a much higher credit score. So by leading with him in that application that they filled out for Lemonade, it spit out a higher number because a lot of it is credit rated in that initial premium. I said, all I had to do was know that in my head, I knew that she had a better credit score than you did. And it was an easy way for me to just put her as the primary insured and spit out a significantly less expensive number. And I said that nuance is something that AI will probably not have. I mean, they could probably ask a question at some point, which of you has the better credit rating, but that might, at that point, once that starts happening, they might start removing some of the credit rating away from that if that's all it takes to get a better rate.
Right.
But I know that in my head, so that's where some of our value is apparent immediately. But, as far as the direct-to-consumer, it really comes down to, and I say this, what it's worth to you, because you're taking on the entirety of your insurance, and at least in the personal scope, by going to one of those. And to be completely honest, you probably don't exactly understand what you're purchasing or what's available, or what else you could be buying. I go through this all the time, and I say to people, it's probably one of the top 5 things I say to them. I said, listen, whatever we buy here, whether it comes to homeowners insurance or the like, flood insurance not included, I go through the whole list of exclusions with them, and most of the time they have no idea. So it really comes down to, will you pay the premium to kind of have that peace of mind, whatever that premium may be. Right. And I think that will always continue to be the case, at least on the personal line side. I think it's tougher to do that as far as like a Lemonade type on the commercial side. Maybe some of the small business will start to go that route, but I think in that middle market to large market, it'll almost never happen due to the complexities of all the moving parts in a large commercial insurance program.
Right. And to that point, I think there's I just want to clear the air, and for lack of a better word, insurance is looked at by a lot of people as a commodity, and that's complete bull. Like, it is not even close to correct. Insurance is
Great.
a contract. The contract is extremely complex. And like you said, you really have to ask yourself, what am I looking to get out of it? And what am I getting out of what I'm actually purchasing? To kind of divert to, if I think you've seen the movie Tommy Boy, right? Uh, when
Right.
he's in trying to sell brake pads, he's like, look, I could take a dump in a box and market guaranteed. That doesn't mean that you're getting a high quality product. That's exactly
It's
the case.
exactly that.
That's exactly the case with insurance. And that's not to say that the direct writers, don't have a good product or aren't fulfilling the value that a customer is looking for. It's that in a lot of cases, the client is just not thinking what they're looking for. They just look at price, and they don't think about the other, kind of components to the formula, so to speak. So that's a good
Yeah,
point.
it goes against a lot of the way that we consume right now. That direct, kind of like the Lemonade idea, it being its own insurance company, it goes against a lot of how people consume products in this day and age. We always tend to go to aggregators, whether it be an Amazon or something like that.
Hmm.
We go somewhere where you can find that same product from a million different vendors and find whatever price that we were looking for to buy it. When you take it on and you go on your own and you go direct to one of these companies, you've also taken the marketing process on your own as well. And not just the policy premium, but you also in your head have to assign a dollar amount, whatever that may be, to the marketing effort itself. So if you're not going to do that for yourself, and you say, once I've made my move there, I'm just going to kind of run with it until I feel like it's too high, there's been a lot of opportunity cost that you'll miss out on by not having somebody that's doing that or doing that marketing for you annually. For me, I know when one of my carriers has an appetite for that risk, whereas if it's you on your own, you're not going to know any of that information. And for the most part, you're just going to take the renewal as it is until it hits a pain point that you're not willing to accept any longer. And, like I said, you always have to just assign a dollar amount for that marketing effort in your own life, and then find a happy median or equilibrium that you're comfortable with.
Oh yeah, and to that point, like on the insurer side, how do you see this playing out in terms of how we interact with them? Like I know you see how I try and manipulate or move that process forward, and how you have your vision of how to move that
Oh,
process
yeah.
forward. But I mean, have you seen the insurers really embrace Insurtech, or do you see some of them lagging behind from that standpoint?
When I first got into the industry, in 2010, there were a few carriers that were, I would say, had pretty decent online rating platforms and such,
Hmm.
whereas there were a couple that still didn't have that at all.
Right.
In 2010, where you had to manually send in everything to them, whether it be a fax or a PDF or whatever it was. And then once the platforms came about, where you could fit risks inside to like a cookie cutter application or a platform in that small business world, I think that will always be there, and it will only continue to push towards that completely it being Insurtech, whereas there was almost no interaction outside of a large claim or a complicated type of risk. But I think it becomes very difficult for an insurance company to take on the exposure of a middle market or a large market company, relying solely on the artificial intelligence process.
Yeah.
I think it just becomes very difficult because there's a lot for it to have to understand. And I'm going through my normal process now in some of our larger accounts, just trying to figure out how I would be able to manage this, with a machine or a computer doing a large majority of the underwriting. I think it would be difficult.
Right.
That's not to say though that the world can continue down a path where some of the process continues to become more and more streamlined. And we talk about some of this, but it should be, in my mind, I should be able to go on to some type of a rating platform, have an address typed in, and they already have an idea of the valuation, the square footage. That should be readily accessible, and I think that probably through blockchain that'll happen over the times. But there should be a way for them to say, hey, yeah, that's a building we would write immediately, and then it's subject to loss history. But in your head, that they should already be able to kind of spit out a quote just based off of the characteristics on Google Earth, essentially. If you know the square footage and you kind of can understand what it's made of,
Right.
you should be able to spit out in real time on some of those. And then as a broker, you can quickly delineate between what markets are going to be actual players in this and what are not going to be, just based off of those rates, essentially.
Right. And I think you're seeing a little bit of a move in that direction. There are some carriers, I think a lot of regionals, actually. I think actually Berkshire Hathaway was one of the bigger ones that might have a portal like that. But, to the point of, that complexity increasing exponentially the larger the entity is that's getting insured, that's a good reason why I think Insurtech's future, like, they probably will commoditize a lot of maybe the lower third, right? And to your point, like being able to put in your address and get a halfway decent homeowner's policy in a couple of clicks, I think there's some value. There's a lot of value to that, right? But there's also,
I agree.
There's also the dynamic where the much larger risks, there's a lot more field underwriting, meaning, face to face, kind of just looking and kicking the tires on the buildings or the operations that are going to be insured. There's a lot more complexity in terms of, one manufacturer doesn't operate the same another manufacturer does. And there's a big reliance on a human factor there to be able to kind of deductively pivot and ask the questions that need to be asked in order to accurately understand what's happening and what needs to be covered. And so
Right.
A lot of what we do in terms of adopting technology, we're always looking to keep ourselves involved in the mix. And we like those providers that are, decreasing the friction of the transactional process or the marketing process, but they still allow us to add our value in that process. BrokerBudda is a good example of that. Another good example of that is Ask Kodiak and Bold Penguin, that are, offering brokers the ability to go to a central kind of appetite guide and find out which companies actually write those pieces of business. And I would say, as a smaller broker, that's, on the come, so to speak, but as a smaller broker that doesn't have like limitless human man hours to throw at this business at the moment, we're,
Right.
we try and take our best shot in a lot of these cases, and it helps us to have a resource like that so that we don't have to, ourselves go to 5 different websites to do the same rating for the same account, and 3 or 4 of them immediately come back and say, well, that's not eligible because of, some small little nuance to the location or the size of the account. It gives you the opportunity to actually know, the top 3 insurance companies that'll actually write a risk. So, we're always going to err on the side of, picking up those technological advances that are going to help us do our job best and streamline really kind of the wasteful parts of the process, which, will then allow us to deploy our talents a little bit better
Right.
for our clients. So, as kind of as a step forward in this, where do you think you see it going? Like, I've actually entertained through the, we're both part of the CPCU Society. Part of the
Yep.
CPCU Society is a magazine called Insights that they distribute only to members, and I'm kind of like kicking around the idea of writing an article that's like, the insurance brokerage of the 23rd century, like trying to put it 200 or 300 years into the future. So where do you think you see it going? Like, do you see this kind of being the tip of the iceberg as far as how technology is going to affect how we do business?
For sure. I can't imagine that within the next 10 years or so, it's not significantly easier to just get a quote for something whenever you really feel like it. I think that, I think we're at a point now where I could kind of walk up and down a busy street and be able to pull off quotes, kind of out of the thin air. But what I kind of see happening is, at some point, there should be a bit of an aggregation on easy to write risks. Like, let's say, kind of what like a kayak.com does, where you could look at a house and you could have everybody's insurance premium, their base premium at least, subject to whatever the person's credit fluctuations are.
Mm-hmm.
I think you should be able to see that base premium somewhere. Like, that should exist no different than, having to go out and get like a flight or something like that. I think you should be able to be able, that part of the world is still, in my opinion, a commodity as far as insurance. Where there is, value is the pieces of it, understanding what, no two policies are the same thing. They're all just a large piece of paper with a bunch of promises on it, but some of them have very different promises on them.
Yeah.
And I think that's kind of where our niche will always end up being, is that it's difficult to not only navigate going out and procuring insurance, but then procuring the right insurance. I think that is kind of where I always will see us fitting in for sure.
Yep.
But I can't imagine that doesn't happen in the near future, where there's more of an aggregate ability for at least like that bottom third and that personal lines that we kind of always talk about. I see that for sure. I'd like to see, and I always talk about this as like a kind of like the Lloyd's writers, like they were the first ones to really do it. Certain risks that are difficult to insure, or I do see there being an area at some point where you can buy certain insurance against, like whether it be a catastrophic peril or a peril that's difficult to get access to right now.
Mm-hmm.
I do find an a la carte at some point being available, to where you buy your regular policy and you're like, hey, if there's a portal that's available where you can buy mold coverage if you just wanted straight standalone first party mold coverage, and it goes and is purchased from a much larger pool.
Mm-hmm.
And it could be through a lemonade concept where the people that are buying it are kind of insuring themselves and then buying catastrophic bonds over the top of it, or there could be an insurance company there as well that's saying, hey, you bought this, you can also buy, whatever this portal is that I'm thinking up. When you buy that standalone or that regular business owner's policy, you can buy whatever perils are specifically excluded in yours. It should eventually dovetail where, you'll have options to buy those specific exclusions back, either through the company that you just purchased it through, or through various other companies that'll sell it as an a la carte type of thing. I eventually would dream up that if I could myself.
Right. And I also look at, I think PayAsYouGo Insurance, which is analogous to what you were talking about too. PayAsYouGo Insurance, I think, is a dynamic that's also just beginning to be explored. And so in a kind of 1984 type of perspective, I'm looking at it wondering, what the pitfalls are. Like, obviously the positives are, you only pay for what you use, and it's readily accessible. And like you said, you'd have some kind of portal that you could go to get insurance for the next, 15 minutes if you're driving to the grocery store. But the other concern I would have is in terms of the setting of prices and rates, and whether or not that reacts to pay as you go, and just the dynamic that contributes to. So, you can imagine right now, typically insurance rates are set every year, right? So an insurance company typically files their insurance rates for the year, and then they don't get another shot until the next 12-month period in most cases. Well, what if they were resetting rates every minute or every second? Now you have the possibility of having what we would consider a hard market in insurance, which is, a market of very inelastic pricing where the prices go up very dramatically. Inside of a matter of minutes, right? As opposed to, you being able to see the writing on the wall, and then just extrapolate that to, all right, I operate a manufacturing facility. My operating cost is too expensive during this 15-minute period, so we're going to shut down, and then we'll ramp back up in the next 15-minute period when the insurance costs come back down, or when the electricity costs come back down, that kind of thing. So that's definitely a dynamic where I'm going to be interested to see how that kind of plays out. So, all right, I think we
that changing of information is always important to also talk about. I bring up the progressive snapshot one. I had one. This is one of my favorite stories. I had a client who, he kept saying, "Hey, Tim, you saved me 30%. Let me get it." I said, "All right. I mean, we'll sign you up for it. Not a problem." He puts it in his car. He gets to the renewal and it's up like 50% because they said, "Listen, the information that we received from the snapshot has you, frequently driving over the speed limit and at odd hours at all times." So I tell people that, be careful sometimes what you wish for, because giving the data to somebody might not yield the results that you originally intended.
Yeah, that's a good point. the technology also kind of finds the truth, right? So there's certain
Exactly.
things that you,
and some of us don't want it out.
there's certain things you can hide in an insurance application, and there's other things you most certainly cannot, especially if you're
Amazing, right?
if you're tracking your
Agreed.
data. Yeah. All right, cool. So I think we kicked the tires pretty good on this one. We'll definitely have to do
Great.
another one of these in the future because obviously it's changing every day, and we're implementing new stuff every day. In fact, there's one thing that came onto my radar where we were talking about policy differences or language differences. There's actually a provider out there that uses machine learning to compare coverage forms, and it'll actually spit out a summary of the differences between 2 or 3 policy forms if you're trying to evaluate, which policy is the best from a coverage standpoint. And it does it, within a matter of seconds, as opposed to having to have a human sit there and read through every single line by line of each coverage form, or just be an expert. So yeah, no, that'll be interesting. We maybe be able to touch on that in the future. So, all right, I'll let you get back to it, Gio. Thank you for calling in. That's the end of this episode, and we got more coming at you.
Enough.
Thanks, man.
All right, thanks. Take it easy.
Bye.